Welcome back to the channel, or welcome to the channel if it's your first time here. My name is Troy, and since November's now over, it's time for an update on our progress towards an early retirement. November is the midpoint in the final quarter of 2025, so as we round the corner to 2026, we have a lot to cover in today's video, including a large drop in my portfolio and what caused it, an update on how much cash has been invested so far in 2025, and so much more. Before we get into all the details, let me know down in the comments below how you did for November. Did you set any new all-time highs, get any new dividend raises, or reach any new income milestones? I'd love to hear about it down in the comments below. With that being said, let's jump right into the first chart that I like to call the cash deployed tracker and see just how much money we put into the markets for November of 2025. As far as adding money to the portfolio goes this month, November was actually a little bit below average, and to be honest, I'm not really sure why. On the top chart, you can see all the days the market was open, indicated by the green boxes, and how much money was invested on each of those days. In total, I was able to invest $3,147.46 across the 19 trading days in November for an average of $165.66 every day the market was open. Looking down at the bottom chart, that brings the year-to-date total invested to $37,712.32, which gives us an average of $3,428.39 per month, putting us on pace to invest $41,140.71 for 2025. If you look to the far right of that bottom chart, you can see that we've now invested in 227 of the 228 days the market has been open this year, or 205 days in a row, with February 5th remaining the only missed day. This now results in a rounded up 100% invest percentage, or 99.6% if we want to be more exact. From here, let's roll into the total portfolio value and see where all this consistency has taken us. At the start of this year, our portfolio was valued at $341,885.84. We closed out October at $418,623.20. And for November, we actually fell to $403,378.06. And the reason I mentioned that I'm not freaking out about that is because that fall is due to the wife and I taking out $17,000 out of our emergency fund to pay off our land loan for our new house that we're going to be building. While technically it wasn't an emergency, I felt like it was because we were paying 7.5% interest on that land loan, despite me having an 819 or 820 credit score. And that cash we had sitting on the side in the house savings account and in that emergency fund was only getting us in the low to mid 3% in interest. So to me, it was the right thing to do. Going forward, I might need to just exclude that number just like I did for the house savings account when doing these videos, or I might just keep it in there because it gives a better full financial picture. Let me know what you think down below in the comments. For funsies, if we just added that flat $17,000 back into the balance, we would have had an increase of $78,492.22 so far in 2025, and an increase of $1,754.86 in November, despite the rough stretches sprinkled throughout there. Now let me go ahead and share with you what was bought across all accounts for the month of November. Here's a look at all of our activity for November. I'll give you a second to check out the chart on the screen. It shows all of our individual stock and ETF activity across all accounts this month. Now, in total, we added 24.1626 shares, deployed that $3,147.46 we spoke about earlier, and added another $37.49 in added forward dividend income. Speaking of buying future income, let's go ahead and check out our projected annual dividend income right here. We started 2025 with a projected annual dividend income of $2,673.57. By the end of October, that number had jumped to $4,125.75. And now, as of the close of November, we're up to a projected annual dividend income of $4,164.14, which boils down to $347.01 per month, or $11.41 every single day in 100% passive income. Since my focus has been and will remain on total returns and making my portfolio grow by as much as fast as I can, this growing passive income is seen by me as a nice little bonus. Speaking of that bonus, the income from these holdings just keeps coming in. So why don't we check out what came in this month in the forms of dividends and interest with this right here. All things considered, November isn't normally crazy busy. That's saved for December, but we did have some payments come this month from both dividends and interest. So let's check those out. In total, we received 5 dividend payments and 5 interest payments on idle cash across all accounts. 3 of those dividends and 1 interest payment came from the Anyone Can Invest portfolio that I began from the ground up to track right here on the channel. Because I already post separate videos on that account here on the channel, I won't be diving into those in this video, but you can click on that little link on the screen to watch the most recent one if you want. Now, outside of that ACI account and the interest payments, we only received 2 dividend payments this month, so let's check those out right here, beginning with the date, then the stock or ticker, the amount paid, and the total that holding has paid to me in that account all time. First up, on November 14th, Costco, stock ticker COST, paid us $25.77 in our taxable retire early account, bringing the total from that company to $239.39 from this holding all time. Lastly, on November 24th, Comfort Systems USA, stock ticker FIX, sent us another $13.74, also in that taxable retire early account, for a total of $24.48 for the newest holding in this portfolio. For the second month in a row, the ACI account payments and the interest payments make up a lot of the activity here, but since I'm not going over each of those individually, why don't I add them up and share them all with you right here. In total, November brought in $51.37 across all accounts, which is 76.4% lower than November of 2024, which is due to using that emergency fund I spoke about earlier, which impacted the interest, as well as the portfolio reconstruction I did at the start of 2025. As I mentioned last month, there will be changes made to this portfolio again in the coming month or two, which might further impact these numbers. But once again, the goal is to make our money work as hard for us as it can, and the dividends at this point in the journey are a byproduct of that plan working, so I'm okay with the trade-off. Looking at 2025 as a whole, we have a few December 1st dividends already added in there for what will be a very busy month, bringing our year-to-date total up to $3,320.22 in passive income across all accounts, with our busiest and biggest month of dividends left to come. Speaking of this year and previous year's totals, I sometimes like to see how far I've come in my dividend career by looking at this chart right here. This chart will show you each and every penny the wife and I have earned in passive income since we accidentally received our first dividend in my 401k back in 2017. Down at the bottom, you can see that across all accounts, we've earned a total of $13,811.75 in career dividends and more than 125 shares completely for free via the drip. The beauty about the drip is that all those free shares still act like normal shares because they are normal shares and still generate us money in the form of both capital appreciation and, you guessed it, future dividend income. Those are 2 key factors in what is known as the compounding effect, or as we like to call it in the dividend space, the dividend snowball. With that segue being laid, let me go ahead and share with you the charts that I made to track our very own dividend snowball right here. For this month, we did not cross the $14,000 mark needed to update the buy 1000s chart, nor the $15,000 mark needed to update the buy $2,500 chart, so obviously there's no actual updates right here. I still don't like to assume that people that are watching this video have seen my past portfolio updates though, so I always like to at least put these on screen for your viewing pleasure. For anyone that might be new to these charts, simply put, these charts show the amount of days that have passed between each milestone. The realistic long-term goal isn't for each milestone to happen faster than the last, but instead for each new milestone to lower the averages at the bottom of these charts. Dividend investing is a long game, so expecting results yesterday or even tomorrow is setting yourself up for failure, or even worse, down the path of chasing yields and losing money in the long run, which is a mistake a lot of us dividend investors know all too well. Taking your time to grow your wealth the right way is more boring, but it's almost a guarantee if you give it money, time, and space to work. And if it makes you feel any better, I used to have charts just like this for buy $100 and $250 increments, but I began to hit those milestones too fast, so I had to make the goals even bigger. Next, I know a lot of people love to see exactly what makes up someone else's portfolio, so let's go ahead and see the overall portfolio diversification right here. On the left side of the screen, you'll see a pivot table combining all the holdings from both the wife and I's accounts, giving us one consolidated view of the full portfolio. To keep things simple, I've grouped similar holdings together. Instead of listing every ticker, they're labeled by category: S&P 500, SCHD, mid-cap ETFs, leveraged funds, and so on. This makes it easy to see where the money is going without getting lost in the details. Each row shows the group name, the amount invested, and its percentage of our total portfolio. And at the bottom, you'll notice the grand total of all invested capital, $322,378.65, which continues to rise as it focuses on the bigger picture of our invested capital, not the idle cash or market performance. Over on the right, the pie chart visualizes this allocation. Here's how it breaks down now. 40% in the S&P 500 or tracking funds, 14% in mid-cap ETFs, 7% in SCHD, 7% in leveraged funds like TQQQ and UPRO, 5% in our highest conviction dividend growers like Costco, Fix, Microsoft, and Visa, and the remaining 18 positions make up 11.2% of the portfolio combined. Just to continue to drive the point home, and one of the things I do here on my channel that others don't, is that total amount of money I just mentioned is going to be lower than the amount you see on the thumbnail because it's only based on invested capital, not market value. As I said before, and will keep saying, we cannot control what the market does on a day-to-day basis, but we can always control what we put into the market. So that is the number that matters most to me. Now that we've seen where the money is allocated, the next big question is, how's it performing? Next up, we'll compare this portfolio to the major indexes, both short and long term, and see how our approach is delivering. In November, every single one of our accounts underperformed all three indexes, which I'm pretty sure is the first time that's ever happened to me. Looking at the year-to-date numbers, only the HSA is outperforming all three indexes, while 5 of the 6 accounts are outperforming at least one index this year. Shout out to the Dow Jones. Overall, I'm not really sure exactly how much of the recent portfolio reconstruction, and specifically my retire early account, impacted the total returns here, since I took gains and bought new holdings, but apparently that has a larger impact on this particular chart than I thought. That being said, the new position I bought, FIX, is outperforming the stock I sold, Apple, since I made the change, so overall, at least so far, it was the right choice. With that being said, I'd like to close out the video by sharing with you all what I'm expecting to see in our accounts in terms of passive income in the next month, so let's check that out right here. Looking ahead to December, things are going to become really busy, in a good way, to close out the year. I'm showing 19 different dividend payments across all accounts, in large part because of all the ETFs I own pay out in a very common 3, 6, 9, 12 cycle. Now, in order to outperform December of 2024, we need to clear $903.86, including all dividend and interest payments for the month. Can we use December to close out 2025 on the right foot, or will it give us the winter blues? Come back next month to find out. As I said earlier in the video, I'd love to hear about your November in the comments down below. Tell me all about your wins, lessons learned, or passive income gained so I can cheer you on. And in this episode, you heard several references to my Anyone Can Invest portfolio. If you're new to this channel or have no idea what that is, I'm going to link that playlist right here so you can check it out. But until next time, see you.